All right, so everyone wants to know where to put their money in January 2025 after last year.
Yeah, definitely. Yeah. 2024 was wild.
Oh, tell me about it.
But that's what we're here for.
That's why we do these deep dives.
Exactly. Get to the info, smart money moves, and all that.
Exactly. We've got some great articles from Morningstar, Motley Fool, Bankrate. So should we jump right in?
Let's do it. I'm curious what they found.
Okay. So Morningstar, they're going kind of against the grain, highlighting a couple unloved picks, companies they think are ready for a rebound.
Interesting. Contrarian approach.
Yeah. So first up is Estee Lauder. Now, they've had some trouble, mostly in China, which hurt their growth. But they're trying to refresh their products, go more digital, and even cutting their dividend to manage inventory better.
That's a pretty big move. Slashing the dividend signals they're serious about restructuring.
Yeah, definitely. Morningstar's given them a price target of $162, so they see potential there.
Makes sense. Riding out the storm in China, but getting ready for when things pick back up, which hopefully they will.
Fingers crossed, right. Now, their second contrarian pick is Etsy. They've also had a rough time, less people spending money, plus, always that Amazon looming in the background.
Yeah, tough to compete with that giant.
No kidding. But Morningstar thinks their new stuff, like a gift mode on the site, a loyalty program, and more ads on social media, all that could help them bounce back. Think they've had a shot.
It's a gamble for sure. A lot hinges on whether people start spending more freely again. But they gave Etsy a price target of $100, so, not insignificant potential upside if it works out.
Okay, interesting. So let's see what the Motley Fool is suggesting. They have a list of under $100 growth stocks, which I think is cool for folks who aren't, dropping huge amounts of cash.
Yeah, gotta love accessible entry points, especially in this market.
Exactly. So their first one is Uber. Kind of surprising to see them as a growth stock, don't you think?
A little bit, yeah. But I guess their focus on the delivery side, plus finally becoming profitable investors are taking notice.
Makes sense. Though they do have those FTC investigations into Uber One, plus the whole self-driving car thing that could shake things up.
Right, those are definitely factors to consider. Still, with the price around $65, it's a relatively low-cost way to get into a sector that still has a lot of room to grow.
True, true. Okay, and guess what? Etsy's back. Motley Fool also has them on their list, thinking that increased consumer spending could be their ticket back up. And they're even giving them a price target of $53.
Wow, so both sources are bullish on Etsy. Lower price target from Motley Fool than Morningstar, but still a potential upswing. Maybe there's something to it.
Yeah, starting to seem that way. And their last pick in this category is DraftKings. Online gambling, that whole world is just exploding right now, and Motley Fool thinks DraftKings is a major player, especially with all the data they have, plus their margins are expected to get even better.
Yeah, gotta love a company with a data advantage. And at $38 a share, it's tempting. The gambling sector is definitely one to watch, that's for sure.
All right, so switching gears a bit, Bankrate decided to look back at 2024, see who the best and worst performers were. Good reminder that things can change fast. Past success doesn't mean the future is guaranteed.
Oh, absolutely. Past performance is not a crystal ball. But it does show you which companies are resilient, can adapt to the market's whims.
Exactly. So they made this list of the top 10 best-performing S&P 500 stocks in 2024. I won't go through all of them, but a few are pretty wild, like Palantir Technologies, 340.5% increase.
Wow, that's huge. I guess their AI and big data stuff is really paying off.
Yeah, and all those government contracts.
Yeah.
Seems like everyone wants a piece of Palantir these days.
Makes sense. Data's the new gold.
Right. And then there's Vistra, an energy company, up 257.9%. Shows that even in a volatile sector, some companies find a way to thrive.
You got to be brave to play the energy game, but clearly the rewards can be huge.
No doubt. And of course, we see NVIDIA again with a whopping 171.2% gain.
Unsurprising, given their dominance in AI chips, they're in such high demand right now.
Okay, but on the flip side, Bankrate also listed the 5 worst performing stocks. Walgreens Boots Alliance is down 64.3%. Retail pharmacy is a tough business these days, I guess.
It is. Lots of competition and changing consumer habits. It's hard to keep up.
Yeah, for sure. And then Intel, down a massive 60.1%. They seem to be struggling to keep up in the chip world, especially with NVIDIA killing it in AI chips.
Yeah, technology moves so fast. 1 minute you're on top, the next you're playing catch up.
It's a good reminder that even giants can fall, Investors got to stay informed, do their homework.
Absolutely. Complacency can be costly in the stock market.
For sure. Now, remember the Magnificent Seven we talked about earlier? Both Motley Fool and Bankrate, look at how each of them did in 2024.
Yeah, the big tech players. Always
Yeah.
interesting to see how they're performing.
So Apple had a decent gain, 30.1%. Not bad considering how huge they already are. Still raking in cash and people love their products, so
Makes sense. Plus, they're pushing into new areas like healthcare and finance, so there's still potential for growth there.
true. Microsoft was a little lower, 12.1% gain. They're investing a ton in cloud computing and AI, which is starting to pay off.
Yeah, but that's a crowded market. Lots of companies are vying for a piece of that pie.
Absolutely. Now, Amazon, they had a much stronger year, 44.4% gain. Seems like their AI strategy and AWS are really exciting investors.
Well, that big investment in Anthropic, the AI company, it's a statement. Shows they're serious about AI and its potential.
Exactly. Alphabet, Google's parent, had a solid gain as well, 35.5%. They still rule search and advertising, plus they're also diving into AI and other new tech.
And they're not afraid of acquisitions either, like that Fitbit purchase. They're definitely trying to corner the market on wearable tech and health data.
Interesting. Okay, so Tesla was up 62.5%. Always a controversial company, but they're a major force in electric vehicles, and now they're making moves in self-driving tech too.
And their Powerwall batteries are shaking up the energy storage market. They're not just about cars anymore.
It's true. Then we've got Meta Platforms, Facebook's parent company, up 65.4%. They've had their issues, but social media is still their domain, and now they're betting big on the metaverse.
It's a risky gamble on the future of, well, everything online. If their vision works out, though, it could be revolutionary.
Yeah, we'll have to wait and see on that one. And of course, we already talked about NVIDIA's incredible performance, up 171.2%. They're basically riding the AI wave to the top.
No question. They're the ones to watch in the AI chip world.
So yeah, the Magnificent Seven, overall a pretty good year for them. But like Bankrate says, gotta remember, past performance is not a guarantee. Things change, markets shift.
Exactly. Investing always has risks. Do your research, set your goals, and don't put all your eggs in one basket.
Great advice. Now let's focus back on Motley Fool's take on Amazon and their AI strategy. They made a pretty compelling argument for why Amazon is their top pick among the Magnificent Seven.
Yeah, they're all in on Amazon's AI push, especially that $8 billion Anthropic investment. They think that's going to make AWS even more powerful.
And they argue that Amazon's stock price is too low right now. They say it doesn't reflect how well they're doing financially or their potential for growth.
It's an interesting perspective. Amazon has a history of disrupting entire industries and making a lot of money for their investors.
Right. And maybe this AI strategy is their next big win. But like we always say, got to do your own research, understand the risks, and make sure it fits your goals.
Couldn't agree more. Don't just take anyone's word for it. You got to be comfortable with your own decisions.
That's some solid advice. Now, before we jump to part two, Bankrate makes another important point, due diligence. Don't just chase hot stocks or listen to random tips. Really dig into the companies you're thinking about investing in.
So true. Look at their financials, see how they're doing compared to their competitors, and what opportunities they have for growth.
They also say to look the management team, their experience, and their plans for the future. A good management team can make a big difference.
Absolutely. And don't forget to check the company's valuation. Make sure you're not paying too much for what you're getting.
And finally, think about their future. Where can they grow? What innovations are they working on? And what challenges might they face?
It's about looking ahead, seeing where the company's going, and if it aligns with your investment strategy. Investing is about making smart choices, not just following the crowd.
That's a great way to put it. Okay, so let's take a quick break. And when we come back in part three, we'll wrap up this deep dive with some final thoughts and a question to leave you thinking. Stay with us.
Welcome back to the deep dive. Let's pick up where we left off with those stock picks for January 2025.
Sounds good. We already got some insights from Morningstar and Motley Fool, but I'm really interested in what Bankrate found, especially about those top and bottom performers of 2024.
Yeah, it's always fascinating to see who's winning and who's, well, not so much.
Exactly. So Bankrate's got this list of the top 10 best performing S&P 500 stocks from last year. We mentioned Palantir Technologies briefly, but their stock just exploded, like 340.5% increase.
Yeah, that's incredible. I guess their AI and big data strategy is really paying off. They seem to be everywhere these days.
And all those government contracts they snagged definitely help. Governments around the world are realizing the power of AI and data analysis, and Palantir is right there to provide it.
Makes sense. They're definitely capitalizing on a growing trend. Data is the new gold, as they say.
Right. Another one that caught my eye is Vistra, the energy company, up 257.9%, shows that even in a volatile sector like energy, there are opportunities for massive gains.
It's true. It's a riskier play for sure, but if you can pick the right companies, the rewards can be substantial. Vistra is a good example of that.
And then, of course, we have NVIDIA again. 171.2% gain, no surprise there. They're just dominating the AI chip market. Everyone wants their hardware.
It's almost like they can't make those chips fast enough to keep up with demand. AI is driving so much innovation across different industries, and NVIDIA is right at the heart of it.
Totally. Okay, now for the not-so-good news. Bankrate also listed the 5 worst performers in the S&P 500. Walgreens Boots Alliance, they took a tumble, down 64.3%. The retail pharmacy world's facing some serious headwinds.
Yeah, it's getting tougher and tougher. So much competition, online pharmacies, changing consumer habits. It's a challenging landscape to navigate.
Definitely. And then there's Intel, down a whopping 60.1%. They're struggling to keep up with the rapid pace of innovation in the chip industry, especially with NVIDIA stealing the show in AI chips.
Yeah, the tech world moves so fast. If you're not constantly innovating and adapting, you're going to get left behind. Intel's learning that the hard way.
It's a stark reminder that even giants can fall. Investors need to be diligent, stay informed, and be prepared for the unexpected.
Absolutely. Complacency is a recipe for disaster in the stock market. You can't just assume that past success guarantees future returns.
Right. Now let's circle back to those Magnificent Seven we talked about earlier. Bankrate breaks down their individual performances as well. Apple, for instance, had a respectable gain of 30.1%, which isn't bad considering their massive size.
Yeah, they're already a behemoth, but they're still managing to grow. They're generating tons of cash, people love their products, and they're expanding into new areas like healthcare and finance.
True, they're not resting on their laurels. Microsoft came in a little lower at 12.1%. They're pouring money into cloud computing and AI, but it's a competitive market.
It is. Lots of companies are trying to grab a piece of that cloud pie, so Microsoft needs to keep innovating to stay ahead. It's not a given.
Right. Now, Amazon, they had a much stronger year, up 44.4%. It seems their AI strategy, especially with AWS, is resonating with investors.
That big investment in Anthropic was a bold move, but it seems to be paying off. They're signaling that they're serious about AI, and they're willing to put their money where their mouth is.
It's a clear statement of intent. Now, Alphabet, Google's parent company, also did well with a 35.5% gain. They still dominate search and advertising, plus they're dabbling in AI and other new tech.
And they're not shy about acquisitions. Remember that Fitbit purchase? They're making a play for the wearable tech and health data markets. Lots of potential there.
Yeah, that was a smart move. Okay, Tesla. They're up 62.5%. They're always controversial, but they're a major player in the electric vehicle market, and their self-driving tech is generating a lot of buzz.
And don't forget their Powerwall batteries. They're not just an EV company anymore. They're making moves in the energy storage market, too. They're shaking things up.
It's true. They're diversifying their portfolio. Now, Meta Platforms, Facebook's parent company, they were up 65.4%. They've had their share of controversies, but they're still a social media powerhouse. And now they're betting big on the metaverse.
That's a high-risk, high-reward gamble on the future of online interaction. It could be revolutionary if their vision comes to fruition, but it's still a big if at this point.
It's a long game, that's for sure. And then, of course, we've already discussed NVIDIA's stellar performance, up 171.2% thanks to their AI chips. They're at the forefront of a technological revolution.
No question. They're the ones to watch in the AI chip space. They're riding the wave of innovation, and it doesn't seem like they're slowing down anytime soon.
So, yeah, overall, a pretty good year for the Magnificent Seven. But Bankrate makes a crucial point. Past performance doesn't guarantee future results. Investing always involves risk, and things can change quickly.
Couldn't agree more. You have to do your research, consider your investment goals, and diversify your portfolio. Don't put all your eggs in one basket. Spread the risk.
Sound advice. Now, let's shift our focus back to Motley Fool's deep dive into Amazon and their AI strategy. They make a compelling case for why Amazon is their top pick among the Magnificent Seven.
Their whole argument hinges on Amazon's aggressive push into AI, especially with that $8 billion investment in Anthropic. They believe this is going to give AWS a massive advantage in the cloud computing market.
And they argue that Amazon's stock price is currently undervalued. They think it doesn't accurately reflect their strong financial performance or their future growth potential, especially with AI driving so much of that growth.
It's an interesting perspective. Amazon has a track record of disrupting industries and creating tremendous value for their shareholders. They're not afraid to take risks and make bold moves.
Right, and this AI strategy could be their next big win. But, as always, it's important to approach this with a critical eye, do your own research, understand the risks involved, and make sure it aligns with your investment goals and risk tolerance.
Exactly. Don't blindly follow recommendations. You need to be comfortable with your own decisions and understand the rationale behind them.
Now, before we move on, I want to touch on another point that Bankrate emphasizes the importance of thorough due diligence when it comes to investing.
Oh, absolutely. Don't just chase hot stocks or blindly follow tips. Take the time to research and truly understand the companies you're considering investing in.
Look at their financials, see how they compare to their competitors, what are their growth opportunities, all of that.
Exactly. And don't forget to assess the management team. Look at their experience, their track record, and their vision for the future. A strong management team can make all the difference.
They also stress the importance of understanding a company's valuation. Are you paying a fair price for its potential?
Valuation is crucial. You want to make sure you're not overpaying for a company, even if it has exciting prospects. It's about finding that balance between potential and price.
And finally, they encourage investors to think about a company's future. Where can they grow? What innovations are they pursuing? And what challenges might they face?
It's about looking beyond the present and assessing a company's long-term prospects.
Yeah.
How will they adapt to changing market conditions? How will they stay ahead of the competition? These are all crucial questions to consider.
Investing is not just about picking stocks, it's about making informed decisions based on careful research and analysis. It's about understanding the businesses you're investing in and believing in their long-term potential.
Well said. Investing is a journey, not a sprint. It requires patience, discipline, and a willingness to learn and adapt.
Welcome back to the Deep Dive. So we've explored a lot of potential stock picks for January 2025. We talked about contrarian plays, growth stocks, even those big tech giants, the Magnificent Seven. What are some key takeaways for you?
I think the biggest one for me is the sheer impact of AI on the market. It's everywhere. Companies like NVIDIA, Amazon, Palantir, they're all riding that AI wave, and their stock performance definitely shows it.
Yeah, it's not just hype anymore. AI is changing everything. It's creating opportunities, but also, some challenges for investors to figure out. But AI isn't the whole story, right? We saw how things like the overall economy, how much people are spending, even politics can make a difference.
Right, it's all connected. You can't just look at one thing in isolation. Like energy companies like Vistra did great last year, even with all the ups and downs in that sector. And then there's Etsy, facing some headwinds, but could bounce back if people start spending more freely.
So many factors at play. Which brings us to another key point, research. Research. You can't just follow the crowd or blindly chase the latest hot stock tip. You got to understand the business, the industry, the risks.
Absolutely. Due diligence is essential. Look at the company's financials, their management team, their future prospects. Make informed decisions, not impulsive ones.
Couldn't agree more. Remember what Bankrate said. Strong track records, competitive positions, future opportunities. Those are the things to look for.
It's like building a house. You need a solid foundation, strong materials, a clear plan. You wouldn't just start throwing bricks around without knowing what you're doing.
Exactly. Investing is the same way. Have a plan, do your research, know your risk tolerance, and be comfortable with your choices.
It's a journey, not a race. Be patient, be disciplined, and never stop learning.
Love that. Okay, before we wrap up, I want to leave you with a question to think about. All the sources we looked at focused on individual stocks, which is pretty common. But in this world of rapid change, especially with AI shaking things up, is that still the best strategy?
That's a great question, and it brings up the idea of thematic ETFs, those funds that invest in a group of companies tied to a particular theme or trend, like AI, robotics, clean energy, the metaverse, things like that.
So instead of picking individual winners and losers, you're betting on those broader trends that are shaping the future.
Exactly. So is it better to try to pick the specific companies that will succeed, or is it smarter to invest in those underlying themes that are driving the changes? It's something to consider. It depends on your investment style, your risk tolerance, and how comfortable you are with uncertainty.
Some food for thought. And on that note, we've reached the end of our deep dive into stock picks for January 2025. We hope you found this helpful and that you feel more confident about navigating the exciting world of investing.
Remember, there's always risk involved, and past performance is never a guarantee. But with careful research, a long-term outlook, and a willingness to learn and adapt, you can approach the markets with confidence and make smart choices for your financial future.
Thanks for joining us on the Deep Dive. Happy investing.